The US dairy market is dealing with an oversupply of milk, record high whey protein prices, and the potential ripple effects of China easing tariffs on American goods. To help us unpack these dynamics and what they mean for farmers, exporters, and consumers, I'm joined by Nate Donnay. Thank you for joining us, Nate.
Thank you for having me.
So, milk production continues to run hot. Could you remind us what's driving this oversupply?
Sure. To give you some perspective on the level of oversupply that we're dealing with, long run milk production growth in the US averages in the 1 to 1.5% growth range, depending on the time frame that you look at. Milk production in September was up 4% from a year ago. We're going to get the October number later today, actually. And my expectation is production is probably up 4.3%, and the November and December production growth is probably even stronger. So we're running 3 to 4 times the normal growth rate in US milk production. And like with most things, it's a combination of factors that's driving it. First is profitability. Milk prices were pretty high in late 2023, early 2024. Feed costs were pretty reasonable. And US dairy farmers are earning extra revenue from the beef side of things with record high beef and cattle prices that we saw in the US this year. So farm gate margins have been very, very good for US dairy farmers. And when margins get good, we tend to see dairy farmers expand production. Secondarily is a lack of disease issues. Last year, we were dealing with some widespread bird flu infections in US dairy cattle, and this year they've been pretty minor. So we're not seeing the detrimental impact of bird flu this year like we saw last year. And then third, and maybe most important, we've had a record amount of new cheese processing capacity come online in the past year. And dairy farmers either built new farms or expanded existing farms in order to supply milk into these cheese plants. And that's also helping to push up the size of the US dairy herd and US milk production.
And consumer demand for protein seems stronger than ever. How is that reshaping the dairy market?
We're seeing protein being added to everything from water to Doritos, Pop Tarts, and even protein fortified beer. So these food makers are often choosing to use whey protein isolate to boost the protein content of their food. And that's driving whey protein isolate, which is WPI prices to new record highs. I just saw the prices for this week. They're up another 5% to another new record high. So whey is a byproduct of cheese making. So that this record high whey protein isolate price and very high whey protein concentrate prices is boosting margins for some cheesemakers, for the cheesemakers that have the ability to produce these high protein whey products. For cheesemakers who don't have the equipment in place to make these highly concentrated protein powders, um, they're getting squeezed a bit in this current environment. So maybe the most direct impact that the high WPI, WPC pricing is having on the dairy industry is just changing the relative profitability of cheese plants depending on what they're doing with their waste streams.
And China has lowered tariffs on US goods. What could that mean for US dairy exporters?
It's been really difficult to track which tariffs are in place and what tariffs are being removed. Early this year, things were changing on a daily basis. But in early November, the US and China met, and it seemed like they reached a deal to lower some of the tariffs that have been put in place this year. Now, there's an across the board 10% tariff that's being placed on all US dairy products going into China. And as far as I can tell, that tariff is still in place. The tariff that's being removed is an additional 10% tariff on top of that other 10% tariff, which was only applied to specific dairy products, namely products that the US doesn't ship a lot of volume to. The biggest volume that the US exports to China in terms of dairy products is low protein whey, whey permeate, and lactose, which are all byproducts from making cheese. Historically, the U.S. has not shipped much cheese, butter, skim milk powder, yogurt, those other dairy products to China. And it's those other dairy products where we're seeing the reduction in tariffs during November. So, removing the tariffs is probably good news for global economic growth. It might help to boost U.S. exports. I think potentially the most beneficial product would be butter, given how cheap the U.S. is relative to the other major exporters. But frankly, the removal of those Chinese tariffs probably aren't going to impact U.S. exports all that much.
And with milk oversupply but strong whey prices, how are processors and farmers navigating the mismatch?
It's a tough one. We're clearly oversupplied with milk and cheese, but we're undersupplied with whey protein isolate. We're seeing cheesemakers make new investments into isolate production capacity. Some of that will come online in 2026. Some of it will take until 2027. And it's not just US processors, European processors are making these investments as well. So in the short term, as far as I can tell, we're pretty much at max capacity for isolate production. There's not a whole lot we can do other than building and turning on new isolate capacity, which will happen, but it's still going to take some time. So in this type of environment, the function for price is to ration the available supply against the very good demand that we have, and that's what we're seeing. All that the market can do in this circumstance is push prices high enough that we kill off or at least slow some of the demand growth.
And then looking ahead, what should we be watching in 2026 in terms of prices or exports?
Well, the strong milk production growth is not just in the US. We're seeing strong growth in Europe, in New Zealand, in Argentina. So, out of the five major exporters, four of them are seeing very strong milk production growth, and they're all going to try to export that surplus milk. It's going to make this export market very, very competitive. With all of that available supply and the sharply lower dairy prices that we're seeing, I have no doubt the global trade is going to increase in the next 12 months. No doubt about it. So the outlook for exports is pretty good, not because of the reduction in Chinese tariffs, but just because of the available supply and lower prices that we're seeing for dairy. But in terms of pricing, the important driver there is going to be milk production. We are pushing milk prices lower. Eventually, that's going to slow down milk production and the market will turn and prices will start rising again. It's always hard to say when that's going to happen, but at this point, my feeling is that shift probably happens around the second quarter. We still haven't pushed milk prices low enough to really cut milk production yet. It's still going to take another couple of months, and then it'll take some time for the farmers to respond to those lower milk prices. So it pushes the slowdown in milk production really out to the second quarter, and that's maybe when we'll start to see prices for dairy products rising again.
Well, thank you very much for your insights once again, Nate.
Always a pleasure.
For more videos like this, please do like and subscribe.